Welcome to Dayswing Trader, and if you've just signed up, this video is the fastest way to get your bearings. This is the flow page. Every unusual options trade on the Indian market appears here the moment it prints. By the end of this video, you'll know how to read it. One thing first, plainly. This is market data for research, not advice. Nothing here tells you to buy or sell. What we show is what already happened on the exchange. Every retail trader has the same problem. A chart shows you price, and price is what already happened. Somebody placed the orders that moved it. Those orders are the part you never see. In the options market, they leave a record. The exchange counts every contract opened and closed. That record is public. Almost nobody reads it, because it arrives as thousands of rows a second. That's this site's whole job. Every strike, on 160 NSE names, every second. And out of millions of prints, we surface only what is genuinely unusual, a few hundred a day. Before we open the page, the words, so nothing later trips you. Every card names a contract, like TCS 3500 CE August. 3500 is the strike, the price the bet is struck at. C means call, a bet up. P means put, a bet down. The date is expiry, the deadline. The premium is the option's own price, and options trade in lots, fixed bundles of shares. At any moment, every option shows two prices. The bid, the best price buyers are offering. The ask, the best price sellers are asking. The gap between them is the spread. Patient traders wait inside it. Impatient traders cross it, and impatience is information. Every print on our tape says who crossed. At the ask means the buyer paid the seller's price, the buyer was in a hurry. At the bid means the seller took the buyer's price, the seller was. We call the impatient side the aggressor, and the aggressor is usually the informed one. You'll see those words on every card. The two cards you'll meet most. A sweep, one large print, filled in an instant. Somebody kicked the door in. An accumulation, the same size built quietly, piece by piece, over minutes. Most alerts on the page are accumulations, and they are the ones most people miss. Notional is the money. Lots, times the lot size, times the price, shown in crores on every card. And when you see a multiple like 999 times average volume, it often just means the strike rarely trades. Read the rupees first. Multiples second. Before anything else, one idea. Get this and the rest of the site reads itself. Miss it and none of it makes sense. Volume and open interest. Volume is how much traded today. Open interest is how many positions are still open right now. They sound similar. They are not. Say someone buys 10 lots from you, and you are opening a fresh shot. Volume goes up 10. Open interest goes up 10, a new position now exists that didn't before. Next day they sell those 10 back, and you close your shot. Volume goes up 10 again. But open interest goes down 10. That position is gone. Same volume. Opposite meaning. So volume tells you something happened. Open interest tells you whether anybody actually took a position. Volume on its own is noise. That's why every card here checks open interest and says so when it can't. And now the badges make sense. OI tick, fresh, open interest rose and stuck. The exchange confirmed new positions. Pending, open interest hasn't caught up yet. We recheck on a follow-up pass and update the card. Closing, open interest fell, positions exiting, not a fresh bet. The badge is the difference between a bet and churn. Now the page. Before a single trade, The numbers across the top tell you what kind of day it is. Held to close. Big positions still open at the closing bell. Not opened and flipped, held. That matters more than size. Anyone can push a large order through and take it off 20 minutes later. Carrying a position overnight means exposure to whatever happens tomorrow. That's conviction you can actually measure. Then the day's totals. Alerts, rupees, and the split between bullish and bearish. When those two are close to level, the market has no agreement, worth knowing before you talk yourself into a trend. Put-call ratio, and careful, this one trips people up. Ours is built from open interest, standing positions, not from today's volume. Most standing index puts were sold by institutions betting the market holds up. So on this measure a high ratio reads bullish, the opposite of the volume-based version you may have read elsewhere. At extremes it flips to complacency. Temperature, not a signal. India VIX, the market's own estimate of how much it's about to move. Low VIX has two consequences. Options are cheaper to buy. And you're paid less to sell them. And fear and greed, built from four things visible on this page. We show the components, not just the headline, so when the parts disagree, you can see it. Two more views, further down the page. Today's biggest, by rupee value. And where the money went, grouped by name, so you can see if one stock got hit again and again. Somebody coming back 4 times is building, not testing. Each campaign card is one stock's whole day. Two numbers matter. The gross, everything that traded. And the net, what survives after both sides cancel. Judge by the net. The legs and timestamps show the campaign's shape. And watch the warning line. Decided today means the name traded both ways. Read the direction as a lean, not a landslide. Below the campaign sits a stricter list, where big money is buying today. Only straight buying makes it, paid at the ask, with open interest rising. Writing and closing never appear there, by design. So if a name is big on campaigns but missing from this list, its flow was selling, or both ways. And one thing you'll only see during market hours, a live strip of big index sweeps still waiting for open interest confirmation. It sits above the confirmed section on purpose. Watch them, don't chase them. They graduate down the page when the recheck confirms the build. One piece of advice for a first visit. Raise the minimum size filter. Start at 1 crore and work up. Fewer alerts, bigger money, a far clearer picture. Now a single row. Time it fired. Symbol. Strike. Call or put. Expiry. The type of event. Size in crores. What open interest says. And our read, with a score out of 100. One thing traders get wrong constantly. Selling a call and buying a put are both bearish bets, but they look nothing alike on screen. 4 trades, 2 directions. Every card tells you which one it was, and what that means for the stock, you never have to guess. Here's the first card type. A sweep. One large print, filled in an instant. Somebody wanted in now, and paid up rather than wait for a better price. That impatience is the whole signal. Nobody pays through the spread for a position they feel lukewarm about. Patient money waits for its price. This was not patient money. Sweep size is this one print. Fill price is what they actually paid. Quote at fire is where the bid and ask sat at that moment, so you can see whether they paid up, and by how much. Entry is a line worth learning. It tells you where this fill landed inside the recent range. Buying near the low of the window is a very different trade from chasing the high, and across 1,000 bursts, the difference showed up in the outcome. This buyer, Notice, paid above the whole window. Rest of window is the tape around this print, with the print itself taken out. That tells you whether they moved with the flow or against it. An open interest at fire, against where it is now, shows whether real positions opened. Underneath is the tape. The actual print. Time, side, size, price, and who crossed the spread. At the ask means the buyer was impatient. At the bid means the seller was. The impatient side is usually the informed one. You don't have to take our word for any of it. The raw prints are right here. Check or read against the data yourself, that's the point of showing them. And the confidence panel. A score out of 100, with every reason behind it. Ticks for supporting evidence. Crosses against. Nothing hidden. One important thing about that number. It measures evidence, not the future. A high score means well evidenced, real size, open interest confirmed, a clean direction. It does not mean the trade will work. Let's read one more sweep together, for revision, and this time it's a put. Same checklist. One print, bigger than this strike's entire open interest, and the buyer paid through the ask. A put buyer profits when the stock falls, so the same urgency now reads bearish. And look at the badge, fresh open interest, confirmed on a follow-up check. The position stayed open. 95 out of 100, because nearly every piece of evidence lines up. Same way of reading, opposite direction. Now the second type, and the one most people miss. An accumulation. No single dramatic print. Somebody added quietly over minutes, in pieces, trying not to be noticed. Big money usually doesn't want an audience. And this is the majority of what fires here, most days, well over half of every alert on the page. 3 things change against the sweep card. Fill speed is measured. This one was built over 9 minutes, not filled in one print. Patience, not urgency. Second, you get a buy and sell split. A sweep is one burst with one side. An accumulation is a window with 2, and we show you both, so you can see who was actually winning it. Third, the tape is longer and quieter. Lots of small prints instead of one big one. That shape is the tell. Someone working an order down, trying to leave as little footprint as they can. A sweep is somebody kicking the door in. An accumulation is somebody moving in over 10 minutes hoping nobody notices. Both are worth seeing. The quiet one is far more common, and far more often missed. One more accumulation, for revision, this one on the sell side. The prints hit the bid, quietly, for minutes. Selling calls collects premium, a bet that the stock stays down. A sell-side build reads bearish. And notice the score. 69, not 100. The open interest here hasn't fully confirmed the build yet, and the card says so, in plain words. Less evidence, lower score. When we are less sure, you'll know. Before we close, 4 more labels you'll meet, 1 breath each. Call short covering. Open interest fell while buyers hit the ask. That's shorts buying their positions back. The stock often rises on it, but nobody is placing a fresh bullish bet. The card says closing, not opening. Call long exit, the mirror. Open interest falling on sell-side prints. Position holders leaving a long they already had. Not a new bearish bet, just money going home. Closing labels score lower on purpose. An exit tells you far less than an entry. Breakdown accumulation, a put being bought quietly, piece by piece. Fresh bearish positions building. The same quiet pattern you saw on the buy side, pointed the other way. And support accumulation, a put being written. The seller collects the premium, betting the stock holds above that strike. Put writing is bullish, remember the grid. This one scores 89, with the fresh open interest confirmed. So, you can now read the mood at the top of the page, and open the two cards you'll see almost every visit. The fast one, and the quiet one. You've read 8 real cards today, fresh bets on both sides, and the closing labels most sites never explain. This is part 1 of 2. Part 2 covers the rarer signals, open interest spikes, volatility spikes, plus the pages behind this one, alerts on your phone, and the honest list of what this site does not do. The link is right below this video. Until then, take one alert tomorrow, open the tape, and read it yourself. Everything we said today is checkable against the prints. Start free, 5 alerts a day without even signing up. See you in part 2.